Okay, hello everyone. Hello and welcome to our PIP show. We are Thursday, the 20th of February. Sylvain with you for new life together. First of all, I will begin the live by advising you to have a quick look at the risk disclaimer here. So basically, if you are trading CFDs or such leverage instrument, you should be aware of the risk you take by simply trading those kind of instruments. You must be aware of the leverage you are taking on the market to understand fully what you're doing. And so the risk disclaimer here is for you. So today the main question of our conversation together will be: is the euro against the dollar, so the euro dollar currency pair, going to the parity level? So as you may have seen on the market, we began the year with a euro dollar at 111. Okay, 111 and $20 for 1 euro. Right now, the current level of the euro dollar is 107. Okay, so we lost almost 300 pips. And even a little bit more than 300 pips in less than a quarter. Okay, so in less than 3 months, we lost 300 pips. So what is next? Why the euro dollar lost so much value in such a short period of time? This is the question I will answer. And let me show you one figure first. So if you are trading the euro dollar, the first thing you have to keep in mind, and the only chart you have to look at every day before you begin your trading session is this one. So this is a chart of the so-called TECHX. So this is the US dollar currency index. The US dollar currency index is basically the value of the US dollar against a basket of currencies made of euro, Japanese yen, Australian dollar, New Zealand dollar, etc. So you have a lot of different currencies trading against the US dollar, and the US dollar currency index is basically the value of the dollar against those five major currencies. Okay, and if the value of the XY, so basically the US dollar currency index is rising, it simply means that the US dollar gains value against all other major currencies. So as you can see here, so let's have a quick look at a weekly chart. For example, if you have a if you just look at a weekly chart on the euro on the DXY, you can notice something that is clearly crying, I'll say, appealing. You have a bullish breakout of this descending trend. The DXY is now set, I would say, to target and to reach maybe the 104 level. So this is a level that we've made in December 2016, so long time ago, when the euro against the US dollar were reaching new I would say lows. So we at that time we were trading at 105 for the euro against the US dollar. So we are now heading to that level and maybe even more. Okay, if you looked at what the Fed said during its last meeting, so basically if you looked at the Fed minutes that were published yesterday, they just said that they were pretty confident in the U.S. economy and that they will not consider lowering the rates this year. So this is what the market feared. Is the Federal Reserve going to lower the rate because the coronavirus is hitting the Chinese economy, and therefore we will have also some repercussion on the US economy? The Federal Reserve said no, we do not think that this even can affect the long-term growth of the US economy, and we will not cut the rate this year. And also you have to keep in mind that this year we have the US presidential election at the end of the year, so in November 2020, so in less than 9 months now, we will have the US elections. So who will be the next president? Donald Trump or someone else? We don't know yet. So the Federal Reserve cannot do any new move, I would say, until a new president has come to take the power of the United States. So this is my bet. And if you look at the chart of the euro against the US dollar, you have a clear bearish trend that is going on. We are making and we are winning, I would say, 0.13%. The trend and the long-term trend of the US dollar is still bearish. Let me show you the chart. It's loading. Just give it some time, guys. But okay, so now it's good. Look at the chart, and this is a chart that I didn't touch for months. Okay, I made this chart in 2018, I think, and I didn't touch it since because the configuration and the technical outlook is still and remains the same. It's bearish. It's bearish, as you can see here. It's bearish. There is nothing much to say. There is nothing much to do. Okay, look at the tops. They are basically descending, and also the lows are descending, and we are reaching right now. I would say a major support level. So here we have a major support level, and people will maybe start to buy from that level. So 107.32, etc. We will have some reaction, and we will maybe definitely have some buyers that will try to hold that ground and defend that level. But look at the monthly chart now, and from a clearly, I would say, fundamental point of view, we still have a very bearish trade, right? Just look at the euro dollar. We have a bearish trade. We are doing a bearish breakout on the euro dollar. So if we end February this way, what could happen for March? So if we end February this way, March could be a month where we can see a pullback on the euro dollar. So maybe some buyers will try to come here, and so we will reach 109, something like this. And then again, sellers will come into the market, smash the euro dollar, and hopefully bring it down to 103 at the end of the year. And the US dollar will be stronger than ever, and the purchasing power of the United States corporation will be high, but also having a very strong US dollar is not necessarily good for the US economy, because they are exporting a lot of products, and Donald Trump even said and even entered a fight with Jerome Powell because he wanted to have I would say a weak US dollar to boost the American exports. The Federal Reserve was not into cutting that much the rates, was not into devaluating the value of the US dollar, so they entered a small fight. In November 2020 will be a good, I would say, a good date, because we will see who will be the next president, and according to the result of those presidential elections, we will have more clues about the fiscal and the monetary policy of the Federal Reserve. All right, guys. So this is very important to keep in mind. Euro dollar bearish long term, at least until the U.S. Presidential elections in November. But even if we did a technical breakout that is bearish in February, in March we could see and we could experience a pullback, and a very great pullback, which could be a good opportunity for us to enter the market and try to exploit that pullback to enter again on the market. I have a short position on the euro dollar since January, so at 111, so I'm quite good. I'm targeting 106, something like this, or 105, I don't remember. I definitely think that we can do it, but it will not be easy. Okay, so the road is still long until the 106 level that we are targeting since January, guys. So this is my view on that. So is the euro dollar going to the parity before the end of the year? That would be a crazy scenario that is maybe feasible, but for me, the most, I would say, pragmatic scenario and down to earth scenario would be a scenario where the euro against the US dollar will come back to the 104, 105 dollar for 1 euro level. that support level will definitely be defended by the buyers, because this is a major support level that was firstly tested in March 2015, secondly in January 2017. So if we come to that level this year, definitely there will be some interest by institutional traders to buy that level and defend that level. All right, guys. So I think I helped you understand more and more and more that that scenario, that I would say technical outlook, because trading the euro dollar has a lot of advantage, because when you are an expert on what is going on the currencies, you are an expert on, and you can guess basically how will the equity market behave itself, and you can also generate new trading ideas that will help you achieve your financial goals, basically. All right, guys, that's all for us. We see each other Sunday for our weekly debriefing show. Until then, I wish you a lot of luck. Don't overtrade, and take care.